Hey Aaron, how you doing today?
Doing great, Guillermo. How are you doing today?
Aaron, I have a question for you today. We sometimes hear the word investment advisor and portfolio manager. Sometimes you hear them intertwined between each other. Can you tell me what's the difference between one and the other?
Yes, absolutely. So it can be somewhat confusing or might seem redundant. Sometimes you'll see on a business card or an email signature, investment advisor and portfolio manager. They're two very different frameworks of how we deliver investment management to the client. One is a non-discretionary framework. Investment advisor explains a investment recommendation. The client says yes or no to proceed. The portfolio manager has an elevated level of responsibility raised to the level of fiduciary, and they have to act in the best interest of the client according to the governing document, specifically an investment policy statement that was set out at the beginning of the relationship, and act in the best interest of the client in all investment decision making.
Okay, so in simple terms, the investment advisor calls me, says, Guillermo, I have an opportunity. We should buy X stock. I say yes or no. On the portfolio manager side, basically, I'm giving you my portfolio and my money, and then you're making the decisions based on what you believe is best for me. Now, you've included the word fiduciary. Can you elaborate a little bit more on that? And why is it important to me?
Yeah, so the word fiduciary holds a very strong legal context in that there's a higher level of care required to ensure that I'm acting absolutely in the best interest of the client, sort of as though they were myself, you know. There is another concept in investment management or portfolio management called the prudent investor rule, meaning that I have to act to a higher standard of professionalism and responsibility in how the portfolio is constructed that follows guidelines around, limiting concentration risk, limiting being overly invested in a particular asset class, and having a higher level of oversight from a risk management perspective from the organization that I work for.
Okay, so, and Aaron, you as a portfolio manager, can you tell me why is it important for me to be with someone like you versus maybe an investment advisor? Why should I give you full reign of my investments without me having to be involved?
So there are a number of advantages to working with a portfolio manager. Some of them are just practical advantages in that when a portfolio manager has discretion, they can now take action on decisions faster. They can take action on decisions in a more organized way across their book of business. They can, the decision making process when we make investment decisions often is more complicated and nuanced than we can really articulate to a client quickly. So it increases the responsiveness that will occur in your portfolio. There's also within the portfolio manager framework more oversight from compliance and risk to ensure that we are abiding by the investment policy statement and abiding by the guidelines, risk guidelines of the organization. And also, you now have sort of a higher level of comfort in knowing that your investment policy statement that you've set up at the beginning of the relationship is being followed according to your understanding.
Is it fair to think that a portfolio manager has more education than an investment advisor?
Yeah, typically, well, not typically, absolutely, a portfolio manager has a higher level of education requirement than investment advisor. So specifically, you need to either be a chartered financial analyst or a chartered investment manager. Chartered financial analyst, CFA, is the US framework, CIM is the Canadian framework, but they get to the same place of qualifying you from an academic perspective to be a portfolio manager. Then there is a experience requirement. You have to have been working with investments for at least half a decade or so and demonstrating your level of competence and responsibility in the way you construct portfolios. And then there's an application process. So your firm, the organization you work for, has to vet you or evaluate you and look back on your history of action and approve you to apply to the regulators, and then the regulators review an application where you describe, how you invest money using examples and history of your past investment strategies that you've employed as an investment advisor. Once you get there, you can be approved to be a portfolio manager, and then you now have the ability to operate in this new environment where you act as a fiduciary.